What Fed needs to do and what it will do or should do is what markets are wondering now. Now, if we are still debating on which one is better, 50 or 75 BPS interest rate hike in coming 3 months, then there's a possibility that we may have no idea what's going on. The question that has to be answered here is how high the peak rate will be, 4 or higher, and how long it will remain at that level, 1 or 2 years. What matters for crypto market is not the Fed's fund rate, but the 10-year rate. And so the Fed can hike the Fed fund rate as much as they want. But if the bond market doesn't buy their narrative, the 10-year rate isn't moving up. What matters for cryptos is the 10-year rate, and so the Fed can hike the Fed rate as much as they want. Therefore, it is not the magnitude of the increase that is important. Rather, it is what they say to alter the narrative of the bond market. 50 BPS as per some economists seems like a joke because we are still at 8.5%. The rate of inflation has hardly moved at all over the past few months. A shock is exactly what we need right now. 100 BPS for at least a few months, after which you can reduce it. But as the economy continues to slow, we absolutely require inflation of 2%. The unemployment rate might reach 5%, which would be considered a significant disaster. So in this context, what do we expect of Jackson Hole meeting going on right now at filming time? There are a few things that you must understand about this situation. Number one, it is too soon for Federal Reserve to make a pivot. Number two, they will let you know before they really make the change. Number three, they are reliant upon the data. And number four, there is little evidence to suggest that the labor market is experiencing any sort of significant strain, which will keep the Federal Reserve committed to maintaining an aggressive stance towards interest rate hikes. Now, what exactly should be expected with regards to inflation? Clearly, the Fed is concentrating on core inflation. In 2 months, core inflation may reach a new high. The previous record was 6.5% year on year, set in March, and we will remain close to it, if not any higher. The Fed is hoping to see a decline in core inflation. If Fed see core inflation had peaked, then only Fed would pivot, but it is too early to say anything right now. It is important to keep in mind that we are in a post-COVID economy rather than a pre-COVID economy. There are a few important takeaways from Jackson Hole meeting that is taking place right now. The Fed Reserve is extremely dependent on data, which means that they have no idea what to do unless they actually have the data on their hands. However, there is something else that should be taken into consideration now, and that is the fact that the same meeting held over the past 10 years has not significantly moved the markets on average. On the other hand, in comparison to the previous 10 years, this year is unquestionably unique.